Would you like to learn how to use a pre-earnings trend trade strategy? Hi, I'm Larry Gaines, Power Cycle Trading, and in this video I'm going to show you how to use a pairs trade setup for trading Apple into its earnings release. So if you look here, here's Apple, here's a monthly, daily, or weekly and daily time frame, and you can see earnings on Apple will be coming up and released on the 1st of May. Okay, so about 2 weeks away. Now, there's a lot of tendency for a lot of these big guys like Apple, Netflix, and Nvidia, etc. A lot of times they'll trend into earnings, expecting maybe some good earnings to come out of their earnings conference call. So you can see Apple starting to trend up here on the daily. We've got positive momentum, cycle 1 and 2. So you could just buy Apple outright for a shot or a trade to the upside into its earnings release date, the May 1st. But another way to do it, if you want to kind of hedge off the systemic risk in case the market was to really come off overnight, since we're having a lot of headline risk in the market, one way to accomplish that is to do what we call a pairs trade. So what we'd be looking for is a little bit more momentum and implied volatility to increase for Apple as it heads into its week of earnings, which would be May 1st. All right, so you can see it's the momentum indicators, everything's like shifting up. You can see it's starting to break to the upside. Now, if you look at QQQ, you can see it's starting to push up too, but it's got a lot of overhead resistance here. So one way to do a pairs trade to offset any potential overnight systemic risk is you go long Apple, and then you go short something against it. And one thing you could short against it would be the ETF QQQ. So you do it as a spread between Apple and QQQ, and that's what we call a pairs trade. So you'd buy 100 shares of Apple right here. So you pay, say, $173.49, and then you'd sell 100 shares of QQQ at $161.10. So you'll have a spread between the two, and that's what you're going to trade. So that current spread is Apple trading at $12.30 per one share over QQQ. So if you did 100 shares and it goes up to, let's say, 14 or 13.27, then you're up $1 a share or $1.100, so you're up $100. That's a way to do it in case you can hedge yourself from a downside collapse in the market. So we call that a pairs trade, and we can do this type of trade without actually having to buy the shares or sell the shares short. So we can do it using what we call a synthetic option structure. So we could actually go long synthetically Apple using options, then we could go short QQQ using options, so we could make this trade more efficient and we would not have to borrow shares to short QQQ. So good luck trading, and I hope this helps.